Let's get some more on what this potentially means for the company. Ruben Beelders, Portfolio Manager at Griffin Asset Management, is joining us on the line. Ruben, thanks for joining us. I see the stock's up on the back of that news. We know that Foschini has said for some time it's wanting to sell its 55% stake in RCS. It's operated independently, but if you look at the earnings coming through from RCS, I mean, they were pretty strong in the full year, up around 20% before tax. So what do you make of the latest unsolicited bid?
Yeah, I think it's interesting. I don't think this is a trend that's all that new. If one looks at Edcon and Woolies, what they've done with their debtors books, they've also divested them off the balance sheet. And I think we've seen the impact on Woolworths. It just makes the balance sheet a lot cleaner. They don't have to be as geared. Obviously, investors are effectively looking at two different balance sheets. The one balance sheet relates to the retail business. The other balance sheet relates to the collection of the debt associated with that retail business. But I certainly think that in the case of Woolworths, it led to a re-rating. Investors liked the clarity that it provided, and one could get an indication of the actual ROE that the retail business in isolation generated. Mm-hmm. So I think positive for Foschini. It's obviously going to depend on the price that they realize. I think it was fairly common knowledge last year that they were trying to list this company. Didn't succeed in getting that right. So yes, if they get a good price, I think it'll be positive.
Yeah, I mean, if we just look at the full year numbers, the debtors book there stood at 4.2 billion rand. But the fact that, as you say, they're trying to clean up the balance sheet, maybe perhaps focus on what they essentially do, which is retail. But this has been an area where they have been able to make a lot of money from. So are you saying that perhaps it's a signal to us around the credit environment right now that a retailer like Foschini is wanting to step away from this aspect of the business?
It's probably not an ideal time to be selling, and we've seen a lot of concern about unsecured lending. I mean, if one looks at the able results, then it's clear that space is very difficult right now. But yeah, I think strategically it's probably the right move, and as I say, it all depends on the price that they realize at the end of the day. But yeah, it is a difficult space right now, and I think the other thing that's probably affecting management is the capital requirement of having all those debtors. Increasingly, the capital backing that you need to hold for those accounts receivable on your balance sheet is becoming increasingly stringent. I think the cost of interest is probably going to go up over time, so it's going to become prohibitively more expensive to hold all those debts. Yeah,
positioning for the future. So how do you rate Foschini stepping away from RCS right now? I mean, what are your thoughts on the retailer specifically, and Foschini relative to the likes of Truworths and Woolies, if we're going to move, look at it in the clothing space?
Well, look, I mean, we've been cautious on the retailers. We thought towards the end of last year that they were very overbought. I think Woolies was trading above 70 rand, and we just thought that looked a bit stretched. They have come back quite dramatically, and we probably see some value there now. But I would buy only on a short-term bounce. I don't think long-term that retailers are going to be in a good space for the next year or two. If one looks at the consumer-facing stocks, looks at the banks, company like Italtal, management are telling you that it's tough out there in the economy, and I don't think consumers really have a lot of money to spend right now. So I think the retail space is going to be challenging. I'd probably want to be positioned in what I would consider the best operator in the industry, and that would probably be Truworths at this point in time.